1. Retired or soon. Trump's Megabill explained for seniors. 2. Huge tax relief for seniors, no more federal taxes on Social Security benefits. 3. Big Beautiful Bill, will 88% of retirees get tax-free Social Security? 4. Understanding Trump's Big Beautiful Bill, what it means for senior Social Security benefits. 5. Understanding the $6,000 senior deduction in the GOP tax bill. 1. Retired or soon. Trump's Megabill explained for seniors. Are you retired or approaching retirement? The implications of President Donald Trump's recently signed Megabill could significantly affect you. Spanning nearly 900 pages, this extensive legislation includes various provisions that will influence a wide range of Americans, including parents and guardians, individuals with student loans, and over 200 individuals recognized as American heroes. However, there is another substantial demographic that will feel the effects of this bill: seniors. For those aged 65 and older, one of the most notable advantages is a tax deduction of $6,000, which will be available until 2028. This deduction is applicable to seniors earning up to $75,000 individually or $150,000 for those filing jointly. As income increases, the deduction amount decreases, eventually phasing out for individuals earning $175,000 or more and couples earning $250,000 or more. According to estimates from President Trump's Council of Economic Advisers, this deduction could eliminate the Social Security tax burden for an impressive 88% of seniors. Currently, around 64% of seniors are already exempt from these taxes. But wait, there's more. The bill encompasses additional provisions that could impact your daily life. For instance, changes to food assistance programs now require adults to work until the age of 64 to qualify for SNAP benefits, with the exception being parents of children under 14 years old. Moreover, the bill introduces significant cuts to Medicaid and establishes new work requirements for the program, marking a first for adults under 65. Those with incomes above the poverty threshold, $15,650 for individuals and $21,150 for a two-person household, will now be responsible for out-of-pocket co-pays for services such as lab tests and doctor visits. States are permitted to charge up to 5% of an individual's annual income for these services. Funding adjustments to Medicaid are set to take effect in 2028, while the new work requirements are anticipated to be implemented before the end of 2026. Before Trump enacted the bill on July 4, the Congressional Budget Office projected that if this legislation were to pass, an additional 11.8 million Americans could find themselves without health insurance by 2034, and 3 million more might lose their eligibility for SNAP benefits. What do you think about these changes? Are they beneficial or detrimental to our society? We invite you to share your thoughts in the comments below. 2. Huge tax relief for seniors, no more federal taxes on Social Security benefits. In a groundbreaking move that marks a pivotal moment for America's aging population, the Social Security Administration, SSA, has officially endorsed the One Big, Beautiful Bill, a monumental legislative achievement designed to alleviate financial burdens on millions of retirees. This sweeping reform guarantees that a staggering 90% of Social Security recipients, 9 out of every 10 beneficiaries, will finally break free from federal income taxes on their hard-earned benefits. But here's where this victory gets particularly meaningful. For decades, seniors who spent decades contributing to the workforce faced the double whammy of paying taxes on their retirement income. This new law turns that table by implementing a tax exemption for most beneficiaries. By reworking the deduction system for taxpayers aged 65 and older, retirees now have a clearer path to keeping more of what they've rightfully earned. Social Security Commissioner Frank Bisignano calls this a monumental leap forward, emphasizing how these changes honor the program's nearly century-long commitment to safeguarding older Americans' financial stability. While some critics may question the bill's broader fiscal implications, supporters argue it's a necessary correction to a system that taxed what was perceived as retirement security. The SSA promises to keep beneficiaries informed as federal partners work to unpack how individual circumstances might be impacted. For those eager to explore their options or understand the eligibility criteria, the official Social Security website, www.ssa.gov, remains the go-to resource for accurate, up-to-date information. A minor correction was made to this announcement on July 7, 2025, to clarify that the enhanced deduction applies to what they earned rather than the original wording about what they have earned. So, where do you stand? Do you see this legislation as a long overdue reprieve or a policy shift that raises questions about sustainability? Let us know in the comments. We want to hear your perspectives on balancing tax relief with fiscal responsibility. 3. Big Beautiful Bill. Will 88% of retirees get tax-free Social Security? Imagine a world where 88% of retirees could enjoy their Social Security benefits without worrying about federal taxes eating into their checks. Sounds like a dream come true, doesn't it? But here's where it gets controversial. The so-called Big Beautiful Bill isn't quite as rosy as it seems, and it might actually pose significant long-term risks to the Social Security system. Let's dive deeper into what this bill really means for retirees and why the implications are far more complex than initially advertised. First, let's clarify who stands to benefit. According to the White House, under this new legislation, the vast majority of seniors, 88%, who receive Social Security would not have to pay federal taxes on their benefits. However, this isn't a groundbreaking change. As of July 1, 2023, 64% of seniors aged 65 and older were already exempt from Social Security taxation due to existing exemptions and deductions. So, while the bill would indeed extend tax relief to more retirees, it's not creating a new exemption from scratch, it's simply broadening the scope of those who qualify. Moreover, the 88% figure falls short of the 100% promised by President Donald Trump and other supporters. In previous statements, Trump emphasized a future where no taxes would be levied on Social Security, tips, or overtime pay. This new bill, however, introduces a $6,000 tax deduction per person, which phases out gradually for higher earners. By 2028, the deduction is set to expire, potentially reverting the tax-exempt percentage back to around 64%. It's important to note that this tax relief pertains solely to federal taxation. 9 states currently impose some form of state tax on Social Security benefits, although many retirees in these states pay no tax due to exemptions and credits. Who exactly qualifies for this new deduction? Under the Senate-approved version of the bill, individuals aged 65 and older with a modified adjusted gross income (MEGI) of up to $75,000, or married couples filing jointly with a combined MEGI of up to $150,000, would be eligible for the full $6,000 deduction. For those with incomes exceeding these thresholds, the deduction would decrease incrementally until it reaches zero for individuals earning $175,000 or married couples earning $250,000 or more. While the prospect of reduced taxation on Social Security benefits is undoubtedly appealing, there are critical downsides to consider. Social Security's financial health is a growing concern, with projections showing that the program's surplus will turn into a deficit by 2034. At that point, there may only be enough funds to cover 81% of promised benefits. The proposed tax break could exacerbate this issue by reducing the amount of revenue flowing into Social Security's coffers, potentially accelerating the onset of the deficit and further eroding the benefits seniors receive. In essence, while the Big Beautiful Bill offers temporary tax relief to many retirees, it might undermine the very sustainability of the Social Security system. This raises a crucial question. Are we prioritizing short-term gains for some seniors over the long-term stability of a vital social safety net? So, what do you think? Is this bill a welcome relief or a risky move that could jeopardize the future of Social Security? Share your thoughts in the comments below. 4. Understanding Trump's Big Beautiful Bill, what it means for senior Social Security benefits. A wave of hope swept through millions of seniors when official communications promised tax liberation on Social Security benefits, but the harsh truth is that this legislation falls dramatically short of that guarantee. Here's what you need to know about the Big Beautiful Bill and its real impact. The Social Security Administration initially claimed the legislation would eliminate federal taxes on benefits for nearly 90% of seniors, framing it as long-awaited tax relief. Tax experts quickly refuted this as misleading. While the bill does introduce an additional $6,000 deduction for taxpayers age 65 plus, it doesn't actually erase taxes on benefits as suggested. Instead, this deduction merely reduces taxable income, potentially lowering, but not eliminating, tax liabilities for some. But here's where it gets controversial. The SSA later corrected its announcement, clarifying the relief comes by providing an enhanced deduction rather than a direct tax elimination. This deduction phases out for individuals earning over $75,000 or $150,000 for joint filers, meaning middle-income seniors may see reduced taxes while others gain nothing. For example, a senior with $50,000 in combined income might pay less tax on benefits since the deduction lowers their adjusted gross income, the key figure used to determine how much of their Social Security is taxed. However, those already below taxation thresholds won't benefit, and higher earners face phase-outs. And this is the part most people miss. While offering modest relief now, the bill jeopardizes Social Security's future. By reducing revenue via lower benefit taxes, estimated at $30 billion annually, it accelerates the program's insolvency to 2032, a year earlier than projected. Lawmakers now face brutal choices: raise taxes, cut benefits, or combine both. What's your take? Should immediate tax relief for seniors outweigh long-term program stability? Voice your opinion below. This decision affects every American. 5. Understanding the $6,000 senior deduction in the GOP tax bill. Imagine this: a new tax proposal could significantly reshape financial relief for millions of seniors, but not everyone will benefit equally. The GOP's latest tax bill introduces a $6,000 senior deduction, a provision inspired by former President Donald Trump's 2024 campaign promise to eliminate taxes on Social Security payments. While it sounds like a game-changer, the reality is more nuanced and potentially controversial. So, who stands to gain, and what are the trade-offs? Let's dive in. At first glance, the $6,000 deduction seems like a major win for older Americans aged 65 and above. It's one of the most attention-grabbing features of the proposed legislation, and the White House has been quick to highlight it as a lifeline for seniors. However, here's the catch: this perk won't reach tens of millions of low-income retirees, and it may actually accelerate the depletion of the Social Security Trust Fund, a revelation that has sparked heated debate among policymakers and experts alike. Under current tax law, most taxpayers claim a standard deduction, $15,000 for individuals or $30,000 for married couples filing jointly. The GOP tax bill proposes slight increases to these amounts, but seniors already enjoy an additional deduction, $2,000 for individuals or $3,600 for couples. The Senate's new proposal adds another layer, offering seniors an extra $6,000 or $12,000 for couples off their taxable income, but only if they fall below specific income thresholds. For example, single filers earning more than $75,000 annually, or $150,000 for couples, would see the deduction gradually reduced until it phases out entirely for those making over $175,000, $250,000 for couples. But here's where it gets complicated, and perhaps unfair. Many lower-income seniors won't see much benefit because they already owe little to no federal income tax. In fact, data from 2022 shows that the median income for seniors was around $30,000, which aligns closely with the existing standard deduction. As a result, roughly half of all Americans aged 65 and older likely wouldn't gain anything meaningful from the new deduction, even though their incomes have risen slightly since then. And this is the part most people miss: the policy excludes younger retirees aged 62 to 64, further narrowing its scope. The cost of implementing this provision? A hefty price tag. Estimates suggest it will run taxpayers about $90 billion over 4 years, and closer to $250 billion if extended indefinitely. While that's not the largest chunk of the overall tax package, it's still one of the priciest individual components. Interestingly, the House version of the bill initially proposed a $4,000 deduction, leaving uncertainty about whether the final legislation will settle on $4,000, $6,000, or some other figure altogether. This is essentially a meaningful tax cut aimed at upper-middle-class seniors, explains Mark Goldwine, Senior Vice President of the Committee for a Responsible Federal Budget, a nonpartisan watchdog group. While it's marketed as helping low-income seniors, the truth is that many of them don't pay taxes to begin with. The White House, however, remained steadfast in defending the measure. Officials argue it fulfills Trump's pledge to end taxes on Social Security payments, framing it as a historic step toward easing the financial burden on retirees. They emphasize that, when combined with other deductions, the average Social Security recipient would effectively pay zero taxes on their benefits. But critics aren't convinced. They warn that the policy could worsen Social Security's already precarious financial future, even though it doesn't directly alter the program's structure. Here's why that matters. Under current rules, a portion of Social Security benefits is subject to taxation, and the revenue generated helps replenish the program's trust fund. By reducing the taxable income threshold for seniors, the new deduction would shrink the amount of money flowing into the trust fund. According to projections from the Committee for a Responsible Federal Budget, this change could push the exhaustion date of the Social Security Trust Fund forward by nearly a year, from 2033 to 2032. For context, that's the same year today's 60-year-olds will hit full retirement age, and when today's youngest retirees turn 69. For eligible seniors, the actual savings would vary widely depending on factors like income level and filing status. For instance, a married couple over 65 earning $100,000 annually might see their taxable income drop by $12,000 thanks to the deduction. Meanwhile, a single senior earning $40,000 might experience a reduction of just a few $100s. Wealthier retirees whose earnings hover in the low six figures could still qualify, while those itemizing their deductions would also be eligible. Howard Gleckman, a senior fellow at the Tax Policy Center, offers a measured perspective. This deduction primarily targets middle and upper-middle-income households, he says. It doesn't do much for wealthy individuals, nor does it help lower-income seniors who already earn less than the standard deduction, even before considering the new senior bonus. Gleckmore points out that the $6,000 deduction is arguably better than Trump's original idea to fully eliminate taxes on Social Security benefits, which could have disproportionately favored wealthier retirees. That plan, he notes, would have carried a staggering price tag of over $1 trillion. In some ways, this approach avoids doing even more damage, Gleckman adds. But let's be clear, it also doesn't provide substantial relief to those who need it most. So, what do you think? Is this deduction a step in the right direction, or does it fall short of addressing the real challenges facing America's seniors? Does prioritizing tax cuts for certain groups come at too great a cost to the broader Social Security system? Share your thoughts in the comments, we'd love to hear where you stand.